Hi guys, today's topic is coronavirus and the stock market. Which stocks to avoid and what stocks to pay attention to. Almost every news and media outlet is screaming about the coronavirus lately, and a lot of people ask me about this virus in relation to the stock market. The worry has gone so far that I see some people in my suburban town in Pennsylvania wearing masks at the grocery stores and pharmacies. And when I ask my neighbor why she thinks some people have started to wear masks, she said, "Didn't you hear? It's a coronavirus." But at the same time, with 213 lethal cases and over 10,000 cases infected in China and more around the world, as of this timing of this video, it's hard to ignore. And just recently, World Health Organization declared global health emergency. So let's get some facts straight about the coronavirus and how it can influence the stock market and what stocks to buy. Let's start with the name. Corona in translation from Latin means crown. So when viewed under the microscope, scientists noticed that coronaviruses appear to have a crown-like structure. This is why the virus is referred to as a coronavirus. Common symptoms include runny nose, headache, cough, and fever. Shortness of breath, chills, and body aches are associated with the more dangerous kinds of coronavirus. In serious cases, the virus can cause pneumonia. Early reports of coronavirus started to appear back in December, and obviously it was pretty much ignored not only by the market, by the Chinese healthcare professionals and Chinese government, as news headlines were pretty much dominated by phase one trade deal between the US and China and the upcoming impeachment hearings of President Trump. But things started to get to change and to get more serious in the middle of January as more and more cases of new and deadly virus outbreak in China started to come in. After a number of deadly cases and hundreds infected, Chinese government suddenly realized that they have a deadly disease outbreak pretty much in the middle of China, as it was quickly determined that the virus had originated from the market of seaport city of Wuhan, where the wildlife was traded illegally. Chinese government moved quickly to quarantine the city by shutting down all the suburban transport networks and suspending outgoing flights from Wuhan. It urged residents not to leave the city and advised against travel into the city. Later, it actually blocked all the exits from the city with the military patrols on major roads. But as it often happens, especially in a communist country, people with money started to bribe local officials, and almost 5 million Wuhan residents actually left the city before stricter travel restrictions were imposed. And Chinese officials have since expanded that travel ban to 16 surrounding cities with a combined population of more than 50 million people, effectively putting those cities on a lockdown. So the situation has become very serious, sad and scary, and I hope this can be resolved and contained very quickly. But how does this relate to the stock market? First reports of the virus outbreak, the market pretty much ignored, but it's gotten more and more serious as the virus spread out and more deadly cases were reported. Chinese and Asian markets started to fall way before US market did, and US market fell only after reports that more cases in US are identified as coronavirus. So the possibility of the global outbreak grew significantly. The only other as significant virus outbreak that happened fairly recently was SARS, also in China back in 2002-2003, when that virus killed 774 people and over 8,000 were infected. By the way, just for comparison, there have been at least 15 million flu illnesses for the 2019-2020 season, resulting in 140,000 hospitalizations and 8,200 deaths just in the US alone. But still, the flu rarely gets the sort of headlines an outbreak like coronavirus does, despite killing more Americans each year than any other virus, and Americans don't seem to be particularly worried about this. Why? Because these new disease outbreaks cause immense disruption to travel, business activity, and everyday life. They pose significant economic risks that show up in the stock prices, especially for firms in industries exposed to travel or to the Chinese economy. During the peak of the SARS scare back in 2002-2003, the S&P 500 dropped 8.3% and stocks related to travel, airlines, China-related had been hammered. At the same time, the price of gold jumped 4.8%. There is some good news and some bad news for treating this disease and the stock market. The good news is that just recently a team of scientists in Australia said that they have successfully developed a lab-grown version of coronavirus, which could help combat the global spread of illness. Also, Chinese government is much more open and proactive about handling this outbreak than before. As for the market, historically, Wall Street's reaction to such outbreaks is often short-lived. For example, in 2003, despite market being down 8.3% and in the first few months of the year, during the SARS epidemic, the market still ended up being up over 20% for that year. On the other hand, just because something happened before, it doesn't mean that it will happen again. Also, the outbreak comes at an important time for Chinese as they celebrate the Lunar New Year, which is usually associated with a lot of travel and more than average human-to-human contact, which significantly increases chances of new infections. Also, we still don't know how severe this outbreak is. The experts kept telling us that the coronavirus is not as deadly and not as contagious as SARS was, but as of this video, there were 213 confirmed lethal cases and over 10,000 infected. But the main concern is that coronavirus could stay dormant in the body for weeks before showing any symptoms. Hence, it's very difficult to detect early on, and some experts say that the actual number of infected people could be much higher. So some projecting to go as high as 100,000 cases. The recent news from White House considering suspending all China-US flights amid coronavirus outbreak tells me that they take this outbreak extremely seriously, and for the economy, it's not going to be just a blip on the radar. So there are a number of stocks that I'm watching in light of this outbreak. First of all, I would fade all airlines, travel-related stocks, and China stocks. Yes, I know that's a lot of stocks, and you may miss a few points on a rebound when it happens, but at the same time, you won't get hurt as much if there is more to this virus outbreak than it seems. And my first impression is there could be more. Second, I would avoid smaller coronavirus related stocks that typically not doing so well, but because of this virus, suddenly get spike in the business activity. Stock that sell gloves, masks, or diagnostic kits and whatnot. Here's the list of some of these stocks that are moving on these virus headlines. Alpha Protect, symbol APT, Novavax, symbol NVAX, Nano Verisites, NNVC, symbol Lake Land Industries, symbol Lake, BioCris Pharmaceuticals, symbol BCRX, Cleveland Biolabs, symbol CBLI, Lian Lao Smart, symbol LLIT, and Co-Diagnostics, symbol CODX. I'm sure you've seen some of them in the headlines recently. These stocks could be 10 to 14 days wonders, rising 50, 70, 100% in one day, but can sell off just as quickly as soon as the risks of the virus subside. However, there are some legitimate stocks to buy on this virus outbreak with some long-term potentials. For example, there were a few smaller biotech that rose recently on this coronavirus news, which I liked. First one called Moderna Therapeutics, symbol mRNA. Second called Innovia Pharmaceuticals, symbol INA. Both of these companies announced to receive investments from the Oslo-based Coalition for Epidemic Preparedness and Innovations to produce coronavirus vaccines. The investments mean that Moderna and Innovia will compete with each other to be the first one to develop a Wuhan vaccine. Out of these two, I like Moderna better because they have a better balance sheet and therefore they have more resources, and they also have larger pipeline just in case things don't work out with coronavirus. Another small biotech that I like is VIR Pharmaceuticals, symbol VIR. It's a newer company but still have a very solid balance sheet, and the main thing is that they seem to be the closest to break the coronavirus code. We have a library of multiple fully human maps that bind and neutralize coronaviruses, such as SARS and MERS, that one of the head scientists from VIR Pharmaceuticals said recently. In addition, its scientists are planning to identify the host receptor that allows Wuhan coronavirus infection. However, these companies are still months from getting the right vaccine that will work on this coronavirus. So just to contain this virus epidemic until the new vaccine is found, Chinese government just recently asked AbbVie and J&J to ship their HIV antiviral drugs to help to test its effectiveness against coronavirus infection. HIV antiviral drugs did work back in 2002-2003 to contain SARS epidemic. Unfortunately, so far as I know, these HIV treating drugs had limited effect on this coronavirus. Also, J&J and separately Merck has assembled a group of scientists to work on the antidote. That's why I only recommend J&J and Merck out of the big pharma in light of this outbreak. Another group of stocks that I like right now are semiconductors. Why? Because there are a number of Chinese-based memory chip producers which had brought down or suspended their operations recently. And some of them are based in Wuhan, which is the epicenter of this virus outbreak. As per recent Apple earnings report, the demand for smartphones and other smart devices remain very high, so the lack of supply can benefit companies like Nvidia, Micron, Applied Materials, Western Digital, Lam Research, and whatnot. I would buy these stocks on any weakness. So in summary, because we still don't know how severe this outbreak of coronavirus is and no known vaccine to treat it, as of this video, I would stay away from airlines, travel-related and Chinese stocks. However, I would pay close attention to biotechs, pharma and semiconductor stocks that I have mentioned. So hopefully with the history of viruses and stock market on our side and with so many companies and scientists are working on antivirus, it can be resolved quickly and people around the world can finally breathe a sign of relief. That's my take on this, guys. Please subscribe to my channel and click the like button and write me comments because I'd like to hear from you and what you think about this. And I'll see you in the next video.